This week, cryptocurrencies recover after some volatility following the U.S. and Israel's attacks on Iran. President Trump pushes to get crypto market structure legislation passed into law. And Pantera Capital's Cosmo Jiang breaks down why crypto prices are rising despite volatility on Wall Street. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Major cryptocurrencies are in the green over the last week, even after U.S. and Israel's attack on Iran over the weekend. By noon Eastern, Bitcoin crossed the 70K threshold and was trading at $73,317. Crypto markets largely recovered after a plunge in the immediate aftermath of the attack Saturday morning. Prices jumped on Tuesday and are heading even higher Wednesday morning. Now, for the week, Bitcoin was up more than 6%, ETH by about 3.5%, and Solana by more than 2%, all outperforming broader markets. Now, in that same period of time, the S&P 500 index shed around 1%. Also looking at crypto exchange Coinbase. At the moment, shares popped around 15% as of midday after President Trump last night expressed support for passing market structure legislation. But more on that later. To learn more about crypto's reaction to the conflict in the Middle East and what other factors could be driving prices, I spoke with Cosmo Jiang, general partner at Pantera Capital. So crypto prices are making major moves to the upside in recent days. And just this morning, you had Bitcoin top $73,000 for the first time in about a month. And these moves come as Wall Street has been reeling from the conflict in Iran. So talk to me about why we're seeing this split right now where crypto is rising while other investments are facing volatility.
Well, look, we really have to think about where digital assets were over the last few months, right? Clearly, we've gotten to a point after the October sell-off and over the last few months that we are at a very oversold position now versus the long-term trend and versus what are really good underlying fundamentals. And so while assets like Bitcoin were forgotten for a little bit, while gold, silver, speculative retail stocks were really booming earlier this year, we're now seeing it outperform because you have this combination of everything else feeling a little bit tighter, this relative underperformance, and people are starting to realize that actually Bitcoin and other digital assets have always been a safe haven asset and have always been a borderless, like sovereignless asset. And so when there's geopolitical conflict, nothing in blockchain really gets impacted. And that's why we're seeing investors come back to this story and realize that there's an interesting entry point.
So what does the move in Bitcoin and other altcoins say about the current risk appetite right now? Because on the one hand, we've seen a lot of broad risk-off moves in the market, like software stocks falling in yesterday's drawdown, but that runs counter to the moves that we're seeing in the crypto market right now, specifically Bitcoin, which would typically suggest a risk-on sentiment.
I think it really depends on the context that the assets are found in, right? I think Bitcoin and other digital assets just been so oversold over the last few months. If we go back to just even February, we saw one of the largest sell-offs in a very sharp move after Kevin Warsh was nominated to the next Fed chair. We saw very large liquidations of on-chain assets by what people call OG Bitcoin whales or OG Ethereum whales. And so there's just a lot of selling that has already happened for the digital asset space that really we didn't see in other asset classes. Other asset classes have been doing great for the last few months. And so we're just coming from a place where digital assets clearly oversold and other assets maybe a little overbought. And now we're seeing that start to normalize a little bit. And the catalyst really is, unfortunately, the geopolitical events happening recently is causing people to reassess their portfolios, look for places where they probably got a little bit too over their skis, which is probably equities, probably gold and silver, and starting to look at other areas where they've maybe forgotten about to start to balance out their portfolio a little bit.
And what would you say Bitcoin is most correlated to right now? Because in the past, it's been tied to the NASDAQ, and then we saw it trading in lockstep with the IGV and software names for most of this year. It certainly had its narrative stitched to gold, and I will say gold and silver are rising right now too. So what's the correlation to watch at this moment?
Yeah, it's interesting that, on average and over time, digital assets are actually relatively uncorrelated from the broader equity markets, but it's because there are periods of high correlation and periods of even anti-correlation. So we just went through this since October, really, we've been going through this period of anti-correlation with equities where crypto has been trending downwards while equities have been trending up. I think that really speaks to, in the very near term, people are relatively allocated. In other words, people are pretty fully invested, and so when they want to invest incremental dollars, they need to take it from somewhere. And so we've been seeing a little bit of outflows from digital assets into other asset classes, especially the retail speculative bid has been going to other asset classes. And now we're seeing, and that just got a little bit too overbought, and now we're seeing that start to revert a little bit. And so I think we're going to continue to see a little bit of anti-correlation, if you will, with equities in the near term. And then it's very possible that as risk appetite generally improves, hopefully as this conflict calms down, that both these assets can get bid at the same time again.
And then from a macro perspective, there are potential headwinds ahead for the global economy. Oil prices are rising based on those Middle East tensions. And then in the US, all eyes are still very much on the Fed and the end of Jay Powell's chairmanship. So what are you watching right now that could be an influence on crypto?
So I definitely think the broader macro markets matter for crypto. Where this whole liquidity picture has historically been very important for assets like Bitcoin that have a finite supply. But when you look at everything else, which is blockchain technology, which is Ethereum, which is Solana, all these assets that are really growing, I think the biggest thing is actually like how sustainable the AI adoption and AI build out is, because we're now seeing so many ways in our portfolio where AI agents are actually really accelerating activity on blockchain. And so as long as the broader macro can go back and forth, but the large secular tailwinds, which are stuff like AI growing and adoption, will really drive important sectors like blockchain continue to grow in adoption as well.
Briefly, when you talk about agentic adoption of crypto, are you seeing that in the context of some of these e-commerce moves, OpenAI partnering with Walmart? Google has certainly made inroads with respect to some of these agentic shopping experiences as well.
So what's really cool is, specifically what we've seen over the last months after the launch of Clawbot, or now OpenClaw, we saw actually more agentic activity or more autonomous activity happening on blockchain rails. There was a crazy stat recently over one of these, when Clawbot officially first launched, we saw many, pretty large spike in creation of new blockchain wallets and blockchain transactions on Solana. Now it's hard to draw the exact correlation, but they happen, coincident at the same time. And you see on Moltbook, which is the social media website that these agents are using, you actually saw them talking about spinning up new blockchain wallets and using blockchain to start to transact with each other. And so while we're still early days in what agentic finance will really look like, we feel very strongly that as more and more autonomous agents participate in commerce and really are transacting back and forth between agent to agent and not necessarily agent on behalf of user, we're going to see more and more usage of blockchain to satisfy those constraints, because blockchain is just better financial rails and digitally native financial rails.
From a regulatory perspective, prices were boosted on expectations that we'd see multiple rounds of crypto legislation before the midterms. That now seems less likely, even as President Trump is backing stablecoin issuers in this fight over market structure. Are investors just looking past that uncertainty around legislation, or if this fight drags on even longer, will it hurt prices more and more?
I certainly think market structure legislation is really important for the long-term growth of the asset class. I do think it's really nice, though, that in the interim, even if this bill, is seeing some rockiness and there's back and forth, and every day you're hearing something different. What we've seen is the SEC chair and CFTC chairs have both stepped up and really said that, hey, while we are waiting for regulatory clarity and official legislation, which everyone is hoping for, we're going to try to make some initial steps to make this easier for the blockchain industry. They're talking about creating a DeFi safe harbor. They're talking about creating a token issuance safe harbor. And so both of these pieces, if the regulators are moving in the same direction, then at least the industry can start looking towards that and start building towards that, even before we have official comprehensive legislation. So it's really nice to see the regulators kind of step up and try to provide some guardrails, even in the absence of legislation, which may be turning out to be further down the road.
Okay, let's catch you up on some of the top stories from the past week. President Trump picked his side in the battle between crypto and banking sectors around this issue of stablecoin rewards. Last night, the president took to Truth Social to throw his support behind the crypto industry. He emphasized a need to get market structure legislation done and took a swipe at banks, saying they're hitting record profits and, quote, "we are not going to allow them to undermine our powerful crypto agenda. The ability to offer rewards on stablecoins is a key issue that stalled crypto market structure legislation efforts back in January. Coinbase's Brian Armstrong said that he couldn't support the most recent draft. Trump's post says that Americans should earn more money on their money. The president's support could also invite fresh criticism around potential conflicts of interest, as the Trump family is involved in multiple crypto ventures, including its own stablecoin, USD1. Next, Kraken's chartered bank, Kraken Financial, just became the first crypto bank to get a Federal Reserve master account. Now, master accounts allow financial institutions to access key central bank services like payment settlement platforms FedNow and FedWire. Kraken co-CEO Arjun Sethi said in a statement that the approval would let the company operate as a directly connected financial institution rather than a peripheral participant. Now, other crypto companies have tried and failed to win approval for a master account. Most famously, Custodia Bank sued the Federal Reserve after repeatedly being denied an account. An appeals court denied Custodia's appeal back in November of 2025. Okay, that's all for Crypto World today, but we'll be back again next Wednesday, and we'll see you then.